Good morning, everyone. Welcome to our, what is today? Wednesday morning trading session. Yes, it's Wednesday. Had to double check the calendar. It's early in my part of the world still, so you have to forgive me. All right, the markets just opened up a moment ago, and we saw a rather quick little sell-off here, pretty much filling the opening gap that I was going to point out to you. Prices leaving off, let's see, where did they finish? Around the 50-40 area yesterday. Very quiet through the overnight, nothing going on. And here, a very quick sell-off out of the open. So any opening range gap that I was going to point out, well, that's since been filled. The market's a little sideways, a little non-committal. Everybody's thinking that when the U.S. presidential inauguration occurs, then we're going to get a little bit more volatility in the markets. We'll see if that's true. Right now, we're more or less in a rather large trading range that seems to be sitting something like this. There we go. So that's sort of what our trading range is looking like at the moment. Extending from down here from around the 50-25 area to around the 50-50 area. We did poke through in the overnight, however, we've been unable to sustain that breakout, so the market effectively still sideways. We'll have to give them a few minutes here to get their bearings. And we're getting a first micro-macro cross here in the hawk, so the hawk's starting to look a little bit on the bearish side, at least to start. This, of course, in the NASDAQ. Crude oil, by comparison, is already pretty bearish. Here's crude oil on Falcon. And funny thing about crude oil lately, it's been making more sustained moves in the overnight, it seems, than during the day. Well, although yesterday was a pretty decent session also. Toward the end of the session, anyhow. And so, pardon me, here we are with crude oil. The market opening right down here, very, very much in a downtrend. Okay, it looks like we're getting a little bit of a sell-off now. Prices below our median line, as well as our primary support, just kind of reacting here to the secondary support at the moment. That's a fairly aggressive sell-off. Okay, so we've got, it seems as though some support forming here on the low. Right at our support level here at 50.37.5. Ay, 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 ay. All right, we're halfway toward a 4-arrow consolidation here in the hawk. I'm really trying hard not to get too anxious here, but I'm sort of tempted to take a breakout here if we get it. Okay, so 50.37 kind of being the limit now on the bottom end. Oh, our Falcon sell signal was spoiled. Oh, and our macro pullback signal just got spoiled here as well. So the buyer's definitely not out of the picture yet. In fact, we are getting a red bar buy signal here on the Eagle. Might be worth looking at that one with a second push opportunity. All right, we'll throw that one in. We'll give this a try. Let's see if they can actually rally. We're again at the top end of this trading range that I pointed out earlier. Right? This is probably not the best spot to be a buyer. And it looks like I got tagged here just near the high, which is kind of defeated the purpose of my second push entry attempt. There we go. Come on, let's get a little bit of breathing room here. If I can get another couple bars in my favor, I will probably move to, let's see, where's the ATR? That's not bad. I may pick up the ATR stop. This is probably a little trend line reaction that we're seeing. Traders throwing in orders around the 50-50 level, anticipating that the market might turn there. Come on, buyers. So once again, we're at the top end of this trading range where we're seeing a little bit of a reaction. The easiest way to trade when a market is in a trading range, when you identify that it's stuck in a sideways type pattern, the soundest trading methodology is to let it break out, allow it to retest, and then prove to you that it can stay out. And somewhere along here, you're going to get a buy signal if, in fact, it can stay out. A trading friend of mine always used to say, you can never trust a breakout. And of course, he's right. So we're getting a couple bars here now with some tails on them. That's nice. If we can get this bar to finish up a little stronger, should be in good enough shape to start rolling our stops up a bit. There we go. Come on, just one more bar, and I'll snap that trade to break even. All right, maybe I'll do it early. I'm a little bit of a chicken, to be sure. There we go. We'll go with the bar high-low. I'll give them that much. Oh dear, it looks as though this is starting to turn on me. I'm going to take this trade to break even after all. All right, that's all you get. Come on, get up there. No. They want to, they're trying, but no, they just can't hold it together. And I have a feeling that this is going to be one of those trades where I'm going to say, Eric, why did you run that stop so tight? Okay. just making a few notes in my trading journal. So, what do we think? Are they going to try to go higher still? They were a little reluctant on that rally. Looks like the sellers are starting to push back a little. I was actually expecting a more bearish day today. Looking at the daily chart, I thought for sure we were going to see the market start to unwind lower. Oh yeah, here they go, trying to recover the market again. Now, had I left my stop below this swing low here where it was, it obviously wasn't enough. It would have been stopped out anyways, but it does look as though they're going to try to rally a little bit more. At least that's how it looks right now. Well, we are getting a few bullish looking signals here. We've got a macro pullback signal here in the hawk, a late filter entry signal here in the falcon, and we also had a cloud crossover signal print while we were watching that eagle trade here in the raptor. Tony's asking about this number one signal that's printing. Tony says, is there any way to know whether it's a good signal or not? Well, we'll be getting into this a little bit more in the training as well, but generally speaking, when one of the high probability signals print, you should always consider it to be a solid signal. However, you need to balance it with the context of the chart as well. So when you're looking at this, the first thing that jumps out at me is that the market doesn't seem to have much of a trend to it. Right? It looks very, very sideways. It's trying to go down, it can't. It's trying to go up, it can't. Now, that doesn't mean that I wouldn't take this number one signal. This is probably, where did we buy in? 50.47. So it's a few ticks late of where we bought in on the Eagle trade. But it's still a reliable signal. From this point, your trade becomes one of management. Right? Somewhere through here, because the buyers have made a rally, we should anticipate at least one more rally, and that's what we're getting here now. So if your initial risk was here, it's probably time to bring your stops up down here somewhere. And depending on how aggressive you want to be with your stops, whether you think the market's just going to get knocked down again, well, in that case, you'll probably keep your stops a little bit tighter, right? Start rolling bar for bar. If you think the trade has a chance, well, you probably hold your stop back a little bit extra. But as far as the quality of the signal goes, it does qualify as a high probability signal. Same thing that we're seeing here right now. We're getting a hard edge buy. If you're hesitant about the signal, the thing to do is not pass on the signal, but dial down your risk amount. So you can still take a look at taking the signal, maybe do it like this. So instead of risking $300 at this point, I'm risking $150 because I've dialed down the risk. If that's still too much for you, dial it down some more. Or simply go to manual mode, and remember that's going to default to this quantity right here. And just throw a single on it and see what happens. Well, okay, see what happens. I know traders hate it when you say stuff like that. They're saying, yeah, it's easy for you to say, Eric. This is my money you're playing with. But honestly, at the end of the day, nobody really knows whether the market's going to go higher or lower. We have our suspicions, right? We got our number one signal. We had a number three signal ready to print here. We suspect the market's going to try to go higher. That's why we're obviously looking to buy. But it does not have to go higher at this point. It may try to drift a little lower, maybe take another bounce off of the secondary support level here. Trading is very reactionary. You shouldn't be so concerned with eliminating all the bad signals, because I'll tell you the truth, the signals that look the worst when they're forming are probably the ones that are going to turn out to be the best. Those are the ones where the market, takes off like a shot, and you're left smacking yourself in the forehead saying, why did I not take that signal? And it happens time and again. So it should almost be a trading criteria. If the signal makes you uncomfortable, go for it. If you're too comfortable with the signal, maybe that's the time that you should be stepping back and saying, do I really want to take this trade? Yeah, Tony says, I'm so used to scalping, I find waiting is worse than a root canal. Obviously, you can still scalp, right? You can still scalp out, but yes, it's true. The raptor, because it incorporates elements of the other birds, is perhaps a little bit more inclined toward swing trading. So, yeah, you're going to have to wait a little bit for some of these signals to pan out. And we've still got a struggle going on here. There's no question. And I would not be surprised to see the market step back and retest this trend line. We're getting a little bit of buying support, it seems. I'm watching the Geiger counter here. It did flip to the buy side for a moment, but look, now it's pulling here hard to the sell side. Oh, it's pulling hard and sticking. So if you are long, it might be wise to bring your stop up at least below this low. Okay, so we're still working off this hard edge bounce signal that was attempting to print. The high of this bar is 49.25. All right, we're in pretty good shape. The Geiger counter pulling hard now to the buy side. And, oh, here we go again near the top of the hour. Doggone it, Eric. You better start looking at your clock. Okay, so we're long from 50-50. And we definitely need a little cooperation here from the bulls. All right, keep going. Obstacle here at 50.52. This was a pretty important number for us yesterday, if I remember right. Oh yes, it was one of our support and resistance targets, 50.52. Yeah, Keith says, I agree with Tony. Tony's comment about waiting for the market is worse than root canal. Yeah, welcome to the life of a trader. And that expression from the Army, hurry up and wait, yeah, they took that from the trading world. Come on. Oh, you scoundrels. Get up there. One more bar. we'll go with the ATR here to start. Parabolic's a little bit too far away. Get my bar high low ready. Just in case I need to go to something a little bit more aggressive. Come on. You stinkers. Stop it. Don't be like that. There we go. 50-51 half. Yeah, there's obvious resistance here at the 52 area. Come on, let's get through some of those orders. 51 half, 51 half, let's go. Give you a little push with the mouse. There we go, 52. Come on, there we go. All right. So now they're starting to pile on here where we have the primary resistance, and you can see we already reacted there pre-market. And we'll have to give you a little push again. There we go. Okay, that's close enough to break even. I'm going to hit my break even trigger. My auto break even sitting right on that primary resistance line. I know I'm a little quick on the stops today. I got an itchy trigger finger. Normally I would just let the stop strategy manage my trade, give the trade a chance to get to my profit objective, but we haven't really seen a well-defined trend here this morning. So while the market keeps searching for direction, I'll keep being a little bit more aggressive with my stops. Yeah, come on, let's just push you over the hump. There, get up. There we go. Come on. One more tick. There we go. Come on, get up there. No, you're going the wrong way. Oh, you guys, you're killing me here. May as well go with the bar high low and save a couple dollars. This primary resistance area really, really strong here this morning. Come on, get up there. Oh, that's twice they've held up there. There must be a lot of sell orders up there around the 50, 54.5 area. All right, come on, let's go. No, they're not cooperating. Stinkers. Well, looks like the broker is going to get paid as they stall out twice at the 54.50 area. All right, just jotting a few notes in my journal. There we go. All right, so now the sellers are going to take their kick at the can. So if you took this number one signal, once again, you had opportunities to bring your stops up. If you didn't get right out at break even, you should have been able to get out relatively close, unless you're still trailing your stop back, say below the median line and this swing low right there, which is still, a reasonable amount of risk for this trade. This is, very, very tiny risk to try to make that trade work. But it does look as though the sellers may have played themselves out. Or pardon me, the buyers. Yeah, Tony says, Eric, you need mouse lube. Yeah, I think I need to send it in for servicing. Hold on a second here, Tony. I will pull up the YM for you. The YM being the mini Dow. Another good $5 instrument. Dear, I think I may have deleted my chart in error. Hold on one second. sorry about that. Okay, so Tony says I haven't got any signals on the YM, and yeah, you're correct. Yeah, it fell off too quickly here out of the open. It looks like it tried somewhere through here to produce a cloud crossover signal, but didn't give us one. Yes, it does not appear as though it's been, the Raptor programming has been working. Well, it's working, but you may have to dial down the YM settings, maybe go to our faster settings to see if that provides some signals for you. It's rare, but it can happen that the market moves so quickly, you don't get a signal. Okay, well, we're back in waiting mode. Saw a lot of yellow bars printing here in the hawk. We did also get this red bar buy signal. The macro pullback, the red bar buy. And that initial eagle signal right here, the red bar buy signal that we took. Turns out I was a little bit quick with my stop. I took the break even, but this trade still in rally mode. Well, rally may be too strong a word, but still mildly bullish. Natalia asks, Eric, hi Eric, I'm confused. When are the training sessions for Raptor 2.0, or does it run during one of the live sessions? We've kind of toyed with the formatting a little bit here, Natalia, and what we settled on was that on Tuesdays and Thursdays, those days are going to be devoted strictly to the Raptor. So we're going to focus a little bit on some of the training via the syllabus that was sent out. So Tuesdays and Thursdays a little bit more Raptor specific. The rest of the week we're still, because we have a lot of DTS owners as well, we're still focusing on the DTS system as well as the Raptor system. So I'm trying to juggle both balls for Monday, Wednesday, Friday, and then Tuesday, Thursday, as I mentioned, is primarily focusing on the Raptor and account growth, things that you can do to grow your account. Phil's asking, has the Raptor generated any signals on crude oil this morning? Well, let's take a look at that. So here's crude oil. Yeah, not this morning, not since the wee hours. The London session, big sell-off in crude oil. Nice, very steady sell-off. And then they kind of settled in coming into the North American Open. And we might be trying to produce a number 2 signal here, a counter trend buy. Not a real deep test of the extreme, I have to say. Not a real good retest of the low, but it may be forming a counter trend signal opportunity. The problem with this one, of course, is if you're going to take it, you're really committed to covering down there. And for me, that's a little bit out of reach. Unless I'm prepared to maybe dial up the risk amount. Or I do something like that. But we still just have the warning dots. We don't have the signal printing just yet. But no, to answer your question, Phil, it looks like it's been relatively quiet for crude oil this morning. Yeah, last Friday it looks like was the most active day this week. Not so much, not yet anyways. Very, very sideways in crude here at the moment. All right, a lot more yellow bars printing here now in the hawk. Trend line fairly flat in the Falcon. I'm wondering whether we're going to see a retest. Looking for some support, or if the market is still going to rally from here. Could make a case for a 4-arrow consolidation here in the hawk. You do need to cover the trade fairly deep, though. Again, the lack of momentum. I don't want to take this trade and throw my stop right there. Chances I'm going to get hit are probably pretty good. However, if I leave my stop down here, I'll have a little bit more staying power. But all this sidewaysness is starting to suggest to me that maybe the buyers are losing their grip. Still early though. We're not even an hour into the session yet. Oh, Natalia and everyone else, if you have questions though, you don't have to wait for one of the scheduled trading days. By all means, ask away. trying to push still right into this primary resistance area. If you did take this 4-arrow consolidation signal and you started with the deeper stop, you can certainly bring your stop up now. Maybe even here below the 50.49 line. Another late filter entry signal here on the Falcon as well. Shoot, I thought the bulls were fading a bit. Really good question here from Natalia. Natalia asked, would you recommend reducing the risk percent in Trade Manager on counter trend trades, since the contract size calculation tends to be larger? Yes, absolutely I would. Counter trend trades by their nature tend to be a little riskier, so unless the setup looks especially strong, yeah, that's very prudent. Dial your risk down 1%, 1.5%. For you larger account traders, you can go 0.5% or even 0.25% of your capital. All right, this is really starting to look like a test of the extreme. And the fact that we can't seem to get above or stay above this primary resistance line is making me think short. It's making me think the market's going to try to head lower. All right, we got a early trend change signal here on the Falcon. Our red bar buy just flat out disappeared here in the Hawk. Oh yes, thanks Tony. Tony's reminding me of crude inventory this morning, and no doubt that's why the market's been so quiet. So we'll pull this over here in a moment. So look at crude inventory. We'll look at it here on the Raptor. Now what I typically do with crude is I use the OCO function. Oh yes, right you guys are. The two Jeffs both letting me know we had a holiday week. Of course we did. So crude inventory is tomorrow. It's moved to Thursday, not Wednesday. Right you are. It would have seemed like a very dismal crude inventory report, wouldn't it? Yes, that's right. Thanks, Phil. When the When there's a holiday Monday, the crude inventory shifts to Thursdays at 11 Eastern. We're getting maybe a slight bearish tint to the day. Look at that selling that went on through there. But no signal just yet. Come on. Probably seeing a little bit of a reaction here to this little swing low back here at 45. And then, of course, the bigger one down here at 50.43. Huh. Just when you think you're seeing something resembling a trend, that also falls through. Daniel's asking, does the bid-ask metric on the trade manager act like the Geiger counter? Yes, in a way it does. You can see the numbers that are printing here will be the same as the numbers here on the Geiger counter. The Geiger counter perhaps gives you a better visual. It kind of shows you the tendency of the market. This bid and ask, of course, moving very, very quickly. But if you see it pull hard to one side or the other and stay there, then yes, it's very similar to the trade manager in that respect, in that you kind of get a feel for which way the market might be leaning. There's some interesting articles online about the bid and ask if you're interested in following up on that sort of thing. It's try not to get too involved in it. It's the kind of thing that's going to drive you crazy. It's just like the time and sales. I remember when Adam, in an effort to become a better trader, started watching time and sales. And it's a difficult tool to gauge. The time and sales, again, related to the bid and ask. Maybe what I should do is pull a dome up here, and then you can see. Hold on, I'm coming. All right, so here we go. So here's the dome, and you can see the order flow, right? You can see how the orders are stacked. It looks like there's a bunch of orders sitting at 52.50. Yeah, 52.50, we've got a rather large number of orders. And then down here at 50.49, we've got a large number of orders as well. So we got a lot of buyers looking to buy 50.49, a lot of buyers or a lot of sellers looking to sell around the 52.50 area. This time and sales going through here as well reflects these orders that are just nearby here. See, when you see 7, there goes that order of 7 right through there. Oh, he's already gone. A lot of them, you'll notice, will just be onesies and twosies. You know, we always think that the stock market is traded, well, it is traded by huge corporations and hedge funds. And you think they're pumping hundreds of orders through at a time, but really, a lot of them are just onesie-twosie orders. And so there is a school of thought that says, you know, you need to watch the order flow so you can gauge which side is in control of the market. You can, but the reason I was chuckling earlier when I was telling you about Adam is he almost drove himself crazy watching the time and sales go by. Because really, to look at it, it's nonsensical. And so what some people do is they'll try to put in block orders. So they'll only trade block sizes. They'll delete everything else. And I'm not going to get into that right here. Well, I could. So we'll delete everything less than 9 contracts traded. So you see we're not going to get anything coming through here except the really big orders. Well, that doesn't help us very much either, does it? So at any rate, I'll leave that for you to play with if you think that's something you may like to pursue. But bear in mind, you know, my criteria that I always tell you, if you're going to head off in another tangent, just make sure that it helps you make a decision. You know, the trading, I always say, is like a stool, a 3-legged stool. You need to have all 3 legs to make it work. That means you need to have a good entry signal. You need to have proper trade management. And you need to have proper money management. It's as much as we are all signal obsessed, the reason you're not making money as a trader is not because you don't have the right settings on your stochastics or MACD or Bollinger Bands or whatever. It's much broader than that. You're not making money because you're very likely you're over trading and you're risking too much relative to your capital. If you can get a handle on those things, you'll usually fare much better. Oh, Jeff was asking, what are the different colors on the time and sales? Some will be orders bought on the ask. Some will be orders sold on the bid, and you know, it tries to differentiate between market orders and limit orders by coding them in different colors. Ralph says it's pretty tough to rely on the numbers anymore when it's almost all computer algorithms that are trading the markets. That's true to a degree. The computers still have to follow certain parameters, though. Like, computers are still going to sell off resistance. Computers are still going to buy off support. The high-frequency trading firms, the HFT firms, they're micro-scalping, right? They're looking for a tick, or depending on if they're trading stocks, they'll be trading for eighths of a tick, or even what they used to call teenies, sixteenths of a tick. They're just looking to scalp with mega volume. You and I can't really trade that way. I know there's a couple people that try. They try to be human HFT traders, but it's very, very difficult to say the least. The nice thing about trading, though, is there's no one right way to trade. You know, you can make money long term, just looking at, I know traders that just look at weekly and monthly charts. That's all they're interested in. They don't care about the day-to-day stuff. They certainly don't care about the intraday stuff. And then there's traders like us who try to take advantage of intraday market moves. But what a lot of people don't understand, too, about the computer trading firms is how quickly they burn through their software. Everybody thinks, oh, HFT firm, they've got some secret sauce, some special programming that allows them to make, tens of millions or hundreds of millions of dollars a year in the stock market. They probably burn through their programming within a week. That's how quickly the markets adjust. Sometimes faster. They have to keep changing it up. So, I read an interesting thread online the other day about somebody suggesting that artificial intelligence is going to take over in the trading world. Yes and no. AI is probably coming, but it's not going to change the way we trade. Humans are far too unpredictable for a computer. All right, so we're getting a counter trend signal now, and it does look like maybe a top is in, a short-term top. We are kind of sitting on a little bit of, if we shoot a little short-term trend line, kind of testing that right there. All right, here we go. And I took Natalie's advice. I dialed down the risk on this one because it is counter trend. I think that's prudent. Come on. Come on. There we go. There we go. Getting a little bit of follow through now. There we go. Okay. Hit the break even. Fantastic. Get on down there now. Now this trade has the potential to retest the lows of the morning, but I'm going to be content to take my profit on target. It is counter trend. But if you're in this, you know, don't be shy. Here we go. We're going to retest the lows of the morning, the support down here at the 50.37.5 area. May have to ride out that little swing that's coming our way, but oh, look at that chunk of orders that came through the market there. We did get comparable signals across the other tools. Here on the Falcon, we got the late filter entry signal. Note the trend line never changes color. Filter goes out of sync, comes back into sync. This also coincided with our trend change signal. So a nice signal there on the Falcon. Here on the Hawk, had to go off of the green bar sell. Oh, although we did get a, this is kind of a convoluted first micro-macro cross signal. Everything unfolded so quickly that we got stuck with a yellow bar in here. But the green bar sell would have been a fairly confident market sell signal to short. And it had the added advantage of getting you in a couple of ticks earlier, which is always nice. The Eagle, sorry, I said we got signals across the board. Not so much here on the Eagle. The Eagle still kind of sort of sideways. Okay, so now we wait again. The movie Enemy at the Gates with Jude Law has a great opening segment. If you haven't seen it before, I'm sure you can find a snippet online. It shows him as a young boy hunting with his grandfather. And just the things his grandfather tells him about the patience required to be a hunter translate perfectly into the trading world as well. Yes, Jeff, that's the sniper movie where he's the Russian sniper. I think Vasily something or another. I forget his last name. Yeah, it's a true story. That's right. Oh, there you go. Phil says it was on HBO yesterday afternoon. I was at a friend's house the other day and we were talking about movies and classic movies and stuff, and his young daughter, who is, I guess, early 20s, pipes up and says, "Oh, yes, I love movies. I love the classics like Forrest Gump." And I'm thinking to myself, has it been that long since Forrest Gump came out? And yeah, it has. Those weren't the classics we were talking about. Oh well. Okay, well, we're just kind of sitting here watching and waiting. The market seems fairly balanced again, and if it is in fact in this sideways range that seems to have developed like this now, well, we can anticipate that there's going to be buying going on down here in the bottom half and selling going on here in the top half, or pardon me, third or quarter. This middle zone is no man's land. The buyers and the sellers pretty evenly balanced at that point. Oh, cool. Steven says he sees Tom Hanks around Santa Monica. Well, say hi for me next time. Steven says, okay. I don't know if you're kidding me, Steven, or not. Well, folks, we're just kind of in a holding pattern, as I said, until we get something going on here. I suspect, for you Raptor traders, what we're going to get, a little bit of a pullback here, maybe a cloud crossover. That's the number one signal. Perhaps that one printing a sell for us. Maybe. Of course, if this support area continues to hold, I think we're going to see it actually head a little lower. But if it continues to hold, we may get another number two to buy. And that's, again, our counter trend. duking it out here. You can tell this bar. Look, we can see the order flow, right? The orders are going through. The bar is just not moving. It's dead neutral. That's a very, very balanced market at the moment. All right, come on. Well, they may not give us much more for this morning session. They may decide to follow through on what they've started here in the afternoon, namely this slightly bearish move. Of course, we have to get through this whole 50-40-ish zone. Kind of put the brakes here on at 50.39, which is kind of a late reaction to 50.40. And then, of course, the really big obstacle, 50.37. Oh, nicely done, Jeff. Jeff says I had 2 ticks of positive slippage on that exit in the last NQ trade. Is that unusual? Yes. Yes, it is. Take it when you can get it. Obviously, there were no orders there, so they had to go down to the next price level. No, good for you. Daniel's asking, are we getting a 4-arrow consolidation on the hawk? Yeah, I'm kind of watching that too, Daniel. If you're just counting the signals, 1, 2, 3, you could be looking at number 4 already. What I would suggest, though, is not taking it on the hash mark. Rather, for the couple 3 ticks, enter below the low. You're going to need to cover at least back to this swing point, ideally up here, or even the crest of the macro line. Should keep you out of harm's way. I think the market is going to head lower. What I don't know is how far back they're going to look first. Right now, the way things are setting up, it looks like a slightly more bearish tone on the day now. We started a little bit more bullish. There was no follow through. We couldn't get above 50, 54. Retested a couple of times. So we retested the high here, retested the high again here. Finally broke down, broke a significant support level. Doesn't matter whether you measure it here or here. Why is that important? Well, when the market violates a relatively strong swing point, we can normally anticipate at least 2 moves in that direction. So this is move number 1. The market owes us 1 more. Market owes us 1 more move lower. Now, if it's going to be a big move or a little move, that I can't tell you, but there should be at least 1 more press lower. Now, if you're going to follow the 4-arrow consolidation and only concentrate on the arrows themselves, well, we're just starting the workings of a 4-arrow consolidation, although we are printing a macro pullback, so there are opportunities to get short here. Like I said, I don't think the issue right now is so much the directionality of the trade. Rather, it is where's the best place to get in and where do I keep my stops so I don't get tapped out. So we got a little bit of a rally going on now, and now that hawk moving into yellow bars, which pretty much nixes our selling attempt. I don't know, maybe the buyers aren't done. This little rally that we've seen almost recovering the decline that we saw. So what's going to happen now is we're back here toward the hard edge. We're kind of right back in the thick of it all. We're going to anticipate that next move lower, and it may come as a hard edge bounce or, well, no, we haven't got the cloud crossover just yet. But if this moves down and fails and starts to head higher again, well, then you can bet that we're pretty much stuck in a sideways range like this, and that, like I said, there's going to be buying going on down here around the bottom third, bottom quarter, selling going on up here around the top third, top quarter. And so we'll get that retest the failure and probably a number 2 signal printing somewhere around here, which you can try to buy and rally back up inside the trading range. I wouldn't get overly aggressive on it. The market does not seem to be trending all that well today. Little short-term pops higher and lower, but for the most part, pretty stagnant. And now starting to look a lot more bullish again, too. Well, that's typical of a sideways day. All right, boys and girls, I think we're going to wrap up shop here for this morning. I don't anticipate too much going on into the lunch hour, but we may see a move again this afternoon, so be careful. But for the next little while, we can probably expect the market just to continue to drift sideways. All right, I will catch you again tomorrow morning. We will talk to you then. Bye for now.